So what is going on with crypto? After a few weeks of things being pretty quiet, the market has just been hit by this wave of turbulence. Prices are down, that feeling of uncertainty is way up, and pretty much everyone is asking the same thing. What is happening? Well, we're going to break down the powerful forces at play right now.
You know, the whole market just got jolted awake when Bitcoin took a nosedive, smashing right below that critical $64,000 level. And it wasn't just Bitcoin, right? Ethereum and basically the entire altcoin market saw these big drops. It totally shattered that period of stability we were enjoying and, yeah, sent a wave of anxiety through a lot of investors.
But here's the thing. This wasn't just random market noise. No way. This volatility we're seeing is actually the result of a collision between three massive, really distinct forces. We're about to break down every single one so you can see exactly what's pulling the levers behind the curtain.
Okay, first up, we have to zoom out. I mean, way out. To really understand what's happening inside of crypto, we first need to get a look at the traditional economic signals that are affecting every single investor out there. Doesn't matter if you're in stocks, bonds, or digital assets.
So, that first shockwave, it came from the latest U.S. jobs report.
And man, it landed so much weaker than anyone predicted. The market was looking for about 106,000 new jobs. The actual number, a measly 73,000. A miss that big, it immediately kicks off all this speculation that the U.S. economy is cooling down, and maybe cooling down fast.
So here's the crucial point. A weaker economy usually puts a ton of pressure on the Federal Reserve to cut interest rates, to get things moving again. And historically, lower interest rates and easier money, that's fantastic news for riskier assets, like crypto. So you'd think bad news for the economy is good news for crypto. But, well, it's just not that simple.
Because at the exact same time, we got this totally conflicting signal. Fed Chairman Jerome Powell gave what a lot of people called hawkish remarks. He was really stressing that inflation is still the #1 enemy. His statement basically suggests the Fed is in no rush to cut rates. So now the market is completely torn. Is the weak economy the real story, or is it all about inflation? Right now, nobody knows which signal to follow.
And that brings us to our second force. Because while the macroeconomy is sending all these mixed signals, the story inside the crypto world is just as contradictory. We're seeing this fascinating tug-of-war between some of the biggest players you can imagine and, well, the rest of the market.
On the one hand, the bullish side, you have the corporate titan strategy. You might remember them as MicroStrategy. They are showing just incredible conviction. They didn't just hold their assets through the dip. They went out and made a massive $2.46 billion purchase of Bitcoin. They were aggressively buying the dip.
And they are not alone. Over in Japan, another publicly traded company, Metaplanet, announced it plans to raise and invest a staggering $3.7 billion directly into Bitcoin. I mean, this is institutional adoption on a scale we just haven't seen before.
And just to put Strategy's bet into perspective, their treasury now holds over 628,000 Bitcoin. This is not some small hedge. This is their core corporate strategy. They are betting the entire company's future on the success of Bitcoin. But, and this is the paradox, while these giants are buying hand over fist, the broader market seems to be selling. For the first time in 15 weeks, crypto ETFs, which we often look at as a kind of barometer for general investor feeling, saw a net outflow of $223 million. So the big, concentrated money is flowing in, but the smaller, widespread money is flowing out. Wild. And the bullish signals don't even stop there. The payments giant PayPal just rolled out crypto payment acceptance for businesses, and we're talking over 100 different coins. You've got the majors, of course, like Bitcoin and Ethereum, all the way to meme coins like Official Trump. This is mainstream integration happening at a really, really deep level.
And finally, we arrive at the third force, and maybe the most unpredictable one shaping the market. We have to shift our focus to the global stage, where this high-stakes geopolitical drama is reaching a really critical deadline. So here's the situation. President Trump has issued a hard deadline of this Friday, August 8th, for Russia to agree to a ceasefire with Ukraine. And this isn't just talk, okay? It's being backed by the deployment of U.S. nuclear submarines and the very real threat of severe new economic sanctions.
The stakes for the market here are just enormous. Geopolitical instability like this, it often causes what we call a flight to safety, where investors just dump anything they see as risky. An escalation could send shockwaves not just through crypto, but through traditional markets like gold as well. The outcome is just hanging in the balance right now.
So, when you put it all together, you can see this incredible battlefield of forces. On one side, you have these powerful bullish signs: institutional giants buying up billions, huge corporate adoption from PayPal, the potential for rate cuts, and growing clarity on regulations. But pushing right back are these heavy bearish pressures: weak economic data, hawkish Fed speak, money flowing out of ETFs, and a looming geopolitical crisis. It's a real tug-of-war.
And that really leaves us with the ultimate question, doesn't it? In this titanic struggle between corporate conviction on one side and global uncertainty on the other, between long-term adoption and short-term fear, which force is gonna win out? The answer to that is going to define the next chapter for crypto, and it's a story that is unfolding as we speak.